All right, hello everybody. Welcome back to another edition of the DGI Crab. My name is Colby, the DGI Crab, and today I thought it would be appropriate to do the obligatory dividend investing video where we discuss the concepts of DRIP, Dividend Reinvestment Plan. Do we drip our dividends into the underlying investment, or do we not drip the dividends and just have the cash deposited directly into our account and then reinvest that cash into whatever we decide we want to at a given time? So let's kind of talk through this a little bit. So let's say that we're not doing the drip. We're just going to manually reinvest the cash when it hits the account. What are the advantages there? Well, first of all, this is kind of the big one for me. If you're not doing drip, then that means you're not going to purchase shares that you perceive as overvalued at the time. So, as an example, today a stock, as of the date of this recording, one that I can think of off the top of my head that would appear overvalued would be Broadcom, stock ticker AVGO. That one looks very overvalued by the metrics. It's been on an absolute tear all through 2024. Maybe you're thinking, well, I don't really want to take that dividend payment if you're a shareholder of Broadcom and have it reinvest into the company right now because you think what goes up must come down. Eventually, this apparently overvalued looking stock is going to decrease in value. So I would rather put that into something that looks like a much better deal today. So, okay, that's a point there. Um, and then into the second point, that means that you can take advantage of your confidence in picking undervalued stocks with the extra capital that you're receiving beyond just whatever your normal weekly or biweekly or monthly contributions are. I'm pretty confident in having been an investor for quite a few years now that I can identify a quality stock when it's in a slump and in a temporary phase of being undervalued. Not always right, but I feel like I'm correct more often than not that I could take that cash and reinvest it into something myself that I think I'm going to get more share price appreciation. Uh, not maybe not necessarily a higher yield. It just depends on what looks undervalued at the time, but that I would get more share price appreciation and build up a position in something that may not be cheap 3 to 6 to 9, maybe even 12 months from now. Okay. And then there's the third advantage, which is if you don't automatically have those dividends reinvest in the underlying investment, hey, you've got cash in your brokerage. And cash is generally a little bit quicker and easier to withdraw if you happen to need that money right now. Maybe you have an emergency that's cropped up, a car repair, medical bill, something along those lines. You have a repair with your house that you have to do. Got to have the plumber come out, and that wasn't something that you'd been planning on doing. So I could see, maybe taking some of that quick and easy liquid cash out to sort of help with some temporary expenses, and that can be an advantage also. Now, the advantages to the drip, on the other hand, is first of all, you're going to increase your position passively, automatically. You're not going to spend mental energy on it. You've invested in a position that hopefully at the time was in fact undervalued. So take Broadcom, for example. Maybe I can't think off the top of my head when the last time was that Broadcom looked undervalued, but a couple of years ago, let's say, it was uh, maybe it was going through a slump. He said that yield looks pretty appealing. It's a good company. I'm going to invest some money into it right now. And then it just shoots up 20-30% in value, and you decide to, well, I'm just going to drip. I'm going to believe in that position and continue to gradually expand on that position with the dividend. Well, as Broadcom continued to go up and up and up and up, if you thought that it was overvalued at $800, and then you thought it was overvalued at $1,000, and then you thought it was overvalued at $1,200, well, today it's sitting around $1,600. I don't have it right in front of me, but every previous quarter that dividend was paid out, if you thought it was overvalued at the time and didn't want to reinvest those dividends, well, guess what? You'd have been wrong every single quarter. Microsoft is another stock that's kind of like that, where it it chronically looks overvalued, and yet it just kind of continues to go up and up and up. So if you're not reinvesting those dividends, then you're not expanding on a winner with any additional capital if you're waiting for it to be on sale. So you're essentially letting compounding work its magic and letting those dividends stack and compound or snowball, whatever word you want to use, and just gradually getting those positions larger and larger. Then the third point, and this kind of ties into the other two, but it's the idea of let your runners run. Uh, unless you are at the point where you're about to retire, or some tragedy strikes and you just have to have access to some money now, I typically don't recommend people sell out of positions that they invest in when the stock price it goes way up. Congratulations, you picked a winner. Let it continue to sit and grow. Maybe you're not immediately investing any other capital in it because you do think that it's a little bit overvalued, but at least letting those dividends roll in there every quarter or every month, whatever schedule they're on, to just slowly but surely continue to build up that winning position. It's fun to buy things when they're on sale, but it's also fun to see your winners really take off and continue to grow. So I want to switch gears here for a minute, and let's take a look at this dividend calculator here. Stumbled across this one the other day. I thought it was kind of interesting. There's a lot of dividend calculators out there. There's a lot of good ones. I haven't done a ton of time comparing a lot of different ones. There's a few different ones that I've tried. This one's kind of interesting because for factoring what's already happened. So if we take a look at this calculator, and I'm not affiliated with the Dividend channel or anything like that, I'm going to put a link to the description below to this, and also an article about dividend reinvesting if you want to learn a little bit more about it, get some other perspective on it. But I thought this calculator was interesting. So it's pretty simple. We just enter in the stock ticker here, and then we select a start and an end date for what we're wanting to evaluate. And what it does is this one's pretty straightforward. It's just going to base what we're working off of here off of a $10,000 one-time investment. Uh, Kind of a nice round number because you could easily do similar math if you just wanted to think of it as a $1,000 one-time investment or $100 one-time investment. We're just going to take those zeros, and move them over a couple of points there. But let's take a stock like Microsoft, for example. I've done this with a few different ones just to kind of see what the results are. And I'm just going to go back 20 years to 2004. So this will be, kind of interest for our tier one investors who are in that 18 to 30 range, where Microsoft is one of the stocks that I've put in that tier. And again, it's very, very seldomly undervalued. A lot of the times with Microsoft, I'll break my own rule of waiting until something is yielding 20% higher than the 4-year average. If I can get it at the 4-year average, that's usually a pretty good time to add Microsoft, if you ask me. But anyway, if we invested $10,000 in Microsoft June 26th of 2004, what this is going to show us is the difference between the investments had we been reinvesting the dividends versus if we had not been. So if you see up here at the top, if we had reinvested the dividends, we would have a value in Microsoft right now of $254,434. If we had not been reinvesting dividends, Microsoft, still a nice investment, still 169.5, but a difference here of 85,000. And if you look over at our little chart here, our start price was 28.28. The end price as of today is 450. When we started out, we purchased 353.61 shares, and because we were reinvesting the dividends up to this point, we would have an additional 211 shares of Microsoft. So that's where that difference is coming from here between the $2 amounts. Our average total annual return here is 17.5% versus 15.2 if we were not reinvesting the dividends. So now we've looked at this end of the spectrum. Let's take a look at one of the stocks in our let's look at one of the stocks in our tier 4. Let's take Altria Group, stock ticker MO. So this is a very high yielding company, a company that yields 7, 8, sometimes 9%, depending on when you're buying it. If we look at the results for Altria Group, we could see here. Now, the Altria Group share price doesn't appreciate the same way that Microsoft's does. So a lot of our growth is going to come from the dividends itself. So look at the difference here. Of $10,000 invested in Altria back in 2004, you have $130,000 and $200 total balance here with reinvesting dividends the whole way versus just a $34,500 balance if you were not. So the average annual return with reinvesting dividends is 13.69% versus just a 6.39% if those dividends had not been reinvested. So there's a massive difference here in the high yield stock as well. And now we'll just do one more. We'll do kind of a middle growth position. Let's take Pepsi. Not a really high yielding stock, not a low yielding stock, just right in the middle, good mid-range, steady Eddie performer, just to evaluate our differences here. And with Pepsi, again, we're going to see here $10,000 investment in 04 with reinvested dividends gets us an ending balance of 53.3. Without reinvesting the dividends, we have just a hair above 41,000. Average annual return of 8.73% with dividend reinvestment, 7.31 without. And again, you'll see the difference in shares. We started with 184.6 shares when we first bought it, and then our ending share count gives us 318. And who knows what we may or may not have been reinvesting the dividends in down here. Maybe maybe in these scenarios, we did a great job and we mostly picked winners, and we would beat this total return, even by reallocating that capital ourselves. But for me, I do enough projecting and analyzing and guesswork with the income that I am adding from my just normal income every week, trying to pick winners. And with dividends, I fall on the drip side. I just want to reinvest the dividends automatically without thinking about it, whether the stocks look overvalued, undervalued, or just about right. If the stock looks undervalued at the time and I'm getting dividend reinvestment, that's great. And that's maybe one additional advantage to reinvesting dividends and just being a dividend growth investor in general is if you're just looking at share price appreciation, then when a stock price tanks temporarily, if all you're in it for is the price of the shares, then a tank stock price and being down on your investment can be kind of scary. It can feel like you've really swung and missed and that you've just lost money. But if you've invested in something quality for the long haul and there's a stock, whether it's Pepsi or Altria or any of the quality stocks, any of the quality 60 stocks that are covered on this channel, and you're getting a dividend reinvested at that lower price, you're kind of celebrating because you know that dividend reinvestment's getting you great value. And if it's reinvesting in something like Broadcom that as of today looks kind of overpriced, then again, you'd have been wrong on that one every single quarter for the last few quarters. So you're just kind of letting that runner run. So it really feels like a win either way if you're investing dividends, and that is the route that I go until I get to the point where I am going to live off of those dividends. They're getting reinvested right back into the original investment. So that's today's video. I'm Colby, the DGI Crab. Email me your questions at dgicrab@yahoo.com. Links to the dividend calculator in this article below, as well as some other helpful videos that are linked here on the channel. And I hope you all keep investing. I'll see you next time.